Hello, everybody. Welcome. Come on in. We're going to let everybody in. Give it a second or two. Yep. I think we've got everybody in. Welcome, everybody. You are participating in the North American Expats in France Quarterly Financial Forum third quarter. Thank you very much for being here. I am pleased very much to introduce Brian Dunhill and Simon Kahn, along with myself and Patty Sadowskis, who's going to be monitoring your chat. I've got a little bit of housekeeping rules to partake of with you, and that is, first of all, please hold all of your questions to the very end, so that we're going to make these three presentations, and then you'll have a chance to ask whatever you want to ask, as long as it's pretty much on topic. This is being recorded, so you can watch it again later. You can pass it on to your friends. You can, watch it at another time, no problem. And if you have questions, go ahead and put them into the chat. Just type them in, but make sure that they go to everyone, not just to someone specific. And then that's a good way for us to, at the end, see what questions we have so we can answer as much as we can for you. We only have 1 hour of time. So the first person who's going to speak is Brian Dunhill of Dunhill Financial. And Brian, take it away.
Thank you so much, Adrian, and welcome, everybody. I hope you're having a wonderful day and it's not raining like it is here in London, which is probably even more reason to move to France, where the weather's hopefully a little bit better for you.
Not rainy today here in Nice too. Sorry.
Okay. So we can always dream, though. We can always dream. So today we're talking about real estate. What a wonderful, wonderful topic to be thinking about and dreaming about for that next step. As real estate has been such a great asset class over the last decade or so, as long as you stayed away from, say, Brazil or Russia, which I would say most of you have. It's been a great asset class because of certain reasons, and I kind of just want to delve into a couple of those here up front, and I'll use the parallel of the Rube Goldberg machine. For any of you that don't know the Rube Goldberg machine, essentially it's taking all these mundane tasks, putting them together to build something that should be simple. Something as simple as owning a home. We're going to overcomplicate what's affecting that right off at the beginning, and then Adrian and Simon are going to solve all those issues going forward. So, why has the asset class changed so significantly? Well, the first major part that shifted things when it comes to the overall real estate market is inflation has gone sky high. Inflation has gone sky high around the world for a multitude of different reasons, including supply chain issues during the pandemic, oil prices going through the roof, initially because of Russia invading Ukraine, and now lately because Saudi Arabia and Russia have decided to try to reduce supply, increasing oil prices. And then in other places throughout Europe, we've had a shortening of supply chains and such because of Brexit. So we've seen inflation go up in France. It's controlled a little bit more than the rest of Europe, which is a good sign. But we've got to remember that policy for France is delivered through the ECB, the European Central Bank, just like how in the United States it's done by the Federal Reserve. And when inflation goes up, we have to remember that interest rates go up, and they have in the last year. You might remember a couple of years ago, the last time we had one of these seminars, we were talking about negative interest rates. They're no longer negative. We're close to what they're at in the United States, but we have much higher interest rates at this point in time. And when interest rates go up, naturally the cost of a mortgage goes up, and therefore prices can shift a little bit throughout. Now I get to talk about the macro vantage point of pricing and how to look at pricing, and this is going to be France as a whole. And we utilize two metrics, which are rents compared to current pricing, and the second one being income or earnings. So the net wages people are earning compared to costs. And overall, what you can see is France is still a little bit overvalued compared to the United States in each of those metrics. That being said, most everybody that's on this call is not looking at France overall, first of all, and second of all, they're looking at buying, hopefully with some dollars coming in, and the dollar is strong compared to the euro. So you might be able to get some much better valuations in some much better regions that you should be looking at. But remember, as inflation goes up, interest rates will go up, our mortgage costs will go up. So talking to Simon and getting rates early is so instrumental. Talking to Adrian about what regions of France hold their value and do well on their value is so instrumental. So with that, I will pass the baton over to Miss Adrian to talk about some of those regions and some of those strengths.
Thank you, Brian. Let me go ahead and get my presentation. Can you see it? No, I have to share my screen, right?
Share your screen at this point.
Okay, hold on. Let me do that. Here we go. And then voila. How's that work? Okay.
Perfect.
Okay, thanks everybody. The news is, shoot, sorry about that. The news is that it's a downhill price slide in almost all French cities across the board. And there's a surprise about one of them, which I'll get to at the end. Right now, Paris has seen for the first time in a really long time an average per square meter price under 10,000 euros per square meter, which is just actually quite shocking. In fact, they've had a 4.5% decrease in 1 year, which is like the most amount that it's gone down in a century. So bottom line is that this is a really good time to buy property in Paris, because I've certainly never seen this in the 29 years that I've been in Paris. The prices have continually gone up, and this is the first time we're seeing this kind of a fall. But Paris didn't fall as much as Bordeaux and Lyon, believe it or not. So across the board, the price of property all over France is coming down. Now, a big reason for that is because interest rates are up and the French don't have the same buying power. So consequently, it's just basically a supply and demand issue. And I know that Simon's going to be able to talk, about that in greater detail. This just gives you some detail about the various prices in some of the other cities and what the experts are having to say about it, because it's really been a shock for everybody. What's really interesting, though, is that the one city that has not seen a decrease, that is seen an enormous soar, believe it or not. I'm just, there's a lot of detail in here, and this is in one of my newsletters, so the information's all there in describing all of these various cities. But Nice is the one city in France where prices have soared. And we've certainly seen it just on the ground looking for property. There's very little property on the market, and we've seen prices go really up. So the question is this a good place to buy or not? I mean, prices are up, but are they going to continue to soar? Personally, I think they are. I think Nice is going to continue to see a rise. What they're explaining, what the experts are saying, is that the reason that Nice has gone up is because the market is driven largely by second home buyers who are foreigners who aren't as dependent on mortgages. Maybe Simon will have some comments on that as well. And so it hasn't been affected so much because of that reason, because it's outside money coming in. But I think there's more than that. I think it's also an issue of weather. I think it's an issue of the city being run really well by a really good mayor, Christian Estrosi. I think that COVID encouraged people to get out of their urban enclosed environments like Paris and move to places where they could have more open spaces. So I think that, Nice itself, because it has an international airport, transportation's really good, the lifestyle's great, that it's really the reason it's holding its own. So, if you want to invest in something that will down the road see increases again, Paris is definitely the place to be. Paris is a non-risk market in the long term. Maybe in the short term, we're seeing the decreases, but in the long term, I think it's going to always be Paris. It's going to always be good. But there's a lot to be said for Nice and environs at the moment as well. And again, if you want to see all this detail, you're going to have it on the slides. You'll have it on the recording. I've got it in a newsletter, and you can go through the numbers. But that's the bottom line. So, Simon, are you up?
I'm ready whenever you are. Okay. So we share screen.
Yeah.
Okay. Let's get the slide in. So this is beginning. Okay. So just to give everybody a bit of background about myself. So basically, I've been involved in the overseas property market now for over 40 years. Started really way back in 1983, and this gives you a bit of an idea what I get involved with, and it covers quite a lot of countries. The main countries, which is still popular, and we find this all around the world, where people seem to buy, tends to be France, Italy, Portugal, Spain, and of course, people from Europe buying into the USA. But we're also very busy in these other countries as well. And we're glad to see that Cyprus and Greece has just recently come back on the market as well. A lot of these countries were affected by the credit crunch and have now come back into the market. So today we're talking about France. So this is really to give you an overview where we are. Interest rates are lower than the USA. There's a large diversity of regions to purchase in. I've always used France as a sort of thermometer on where to buy, even in the rest of the world, because you tend to find that people who buy in the north of France tend to also buy in the Costa Brava in Spain or in other parts of Portugal. And then if they're buying in the south of France, then they tend to buy in the south of Spain and south of south of Portugal as well. There's still good rental return in certain areas, which Adrian was coming on to the south of France has always been a good area for return. Negatives to people buying from the USA can be, of course, long flights, and it's difficult also to keep control of your property. So you must make sure, which of course Adrian will help you with, is make sure you get good management company to look after the property. So if there is a problem, you don't have to just keep jumping on the plane to try and sort it out. What's the future potential? Well, there's more higher earners coming back into the market, hence why the south of France is getting busier. And we're also seeing it in the Alps as well, in Paris. And then due to COVID, we're still finding people moved out of the cities and moved into the rural areas. So there's good opportunities possibly in the urban areas because people are moving out, that leaves properties vacant in the urban areas as well. So what's the current state of the market? So let's go on to this slide. I can't read it properly on here. So the lending market is currently contracted, even for local and national. We're even finding that the domestic market is having problems in raising money. My colleague who I work alongside in France has said that for the last 2 or 3 years, lending in and even in the domestic market has been down 50 to 60% because of lots of different pressures. It's restricted because of the worldwide credit crunch. That's had an impact on lending. Lenders have had a low appetite to lend, and there's fewer projects being considered. We did have a major lender pull out of the market last year, which was BNP, which didn't affect the US purchaser because BNP didn't, because of certain reasons, factor and other reasons, didn't deal with US nationals, but it did have an overall impact on the whole market. They were one of the biggest lenders to lending to foreign nationals, non-residents, and a lot of other lenders then took a back step. Will this improve in the future? Well, French mortgage books have been shrinking since COVID, as I've said, but they do need to restart the mainstream lending, and this would also depend on the support of the political system. The political system are still trying to restrict lending. They're trying to control inflation, like most countries are at the moment, and this is different to what's happened in the past. I mean, I've been involved in this market over 30 years, and I'm probably seeing in Europe and France probably the slowest number of people taking mortgages out than I have for many, many years. But we are, and the reduction of lenders. But we hope there's going to be opportunity in the future. And with interest rates continuing to increase, this will have an effect of slowing the market and eventually to more banks cautiously coming back in. One of the problems that the banks had is that the French system was saying, well, you could only charge a certain amount of interest rate and your costs, and they weren't making enough profit out of that to do it. And therefore, with low interest rates, it was getting harder, and that's why some lenders pulled out. Current problems incurred by a non-resident purchasing in France. Lenders do not have an appetite to lend to residents due to there's a number of reasons. It's always risky with lending to somebody outside of the country. It's the added perceived risk, tight margins, compliance obligations that they have to do. Of course, with FATCA, there's an added thing with US passport holders having to report to institutions around the world having to report to FATCA of any American person, passport holder buying a property. And then the increased time and cost to process cases when you're dealing with people abroad. Howard, as mentioned previously, interest rates are interest rates rising. We could hopefully that the market will come back in, and there'll be higher profit banks for the banks. We're hoping that more lenders will come back into the market. The other thing just to bear in mind, by the way, if you move to France and you want to get a mortgage, to be classed as a resident buyer and possibly get better lending criteria, then you must be registered in France and be registered in the French tax system. We do get quite a lot of people who move to France, keep their business in their country where they are, but they still are taxed in the country where they are, so they're still deemed as being non-resident. And if you're moving over or you're going to work for an employer who's still based outside of that country, again, you have that same problem. You have to get yourself registered, be in the tax system, and be resident there.
How much of a difference were you looking at there, Simon, if you don't mind me asking?
Well, if you're resident and living there, then you could probably get up to 90% or possibly more, as opposed to different terms apply. But there's a lot of hoops that you have to go through to get to that. So here, this is the current lending.
Sorry. Are we still looking at the same rate, or is it just the amount, the percentage that they'll
It's
lend?
a percentage. The interest rates are similar. Yeah, there's not much difference between the local, probably by about 1%. The same with any country. Wherever they have to build in a risk element and increase the rate for somebody who's non-resident, because if the person doesn't pay, then of course there's a risk of trying to collect that debt and redeem that debt.
I have seen, people who are salaried with CDI contracts in France get an amazing deal with the banks, really low rates and really, and very high LTVs.
But it does, as I said, if you can become resident and go through all the hoops, then it can be to your benefit. So this is where it stands at the moment for non-residents buying, what the criteria stands. So the minimum purchase price is 400,000, minimum loan 300, maximum loan is 70%, and it must be finished by age 70, which of course I know I do mortgages in the States, and when I deal with a lot of Americans, they're quite shocked that you have to finish by that age, because I know I do American mortgages and there's no ageism or problems there. You can do a mortgage up to age 90, but you do have this restriction here.
This has changed quite a lot, Simon.
It has.
In the last couple of years, this has changed dramatically.
Yeah, but because there's less lenders in the market, and therefore they can control the criteria. So the principal locations are covered here, which Adrian covered, which is what they're looking for. Other locations will be considered, but they're then looking at a higher purchase price. So we're looking at 750 plus for a retail bank to get involved. As I've said at the bottom, and it's quite different, and I've highlighted it, if the purchase price is over 2 million, then we've got banks outside of France in Switzerland, Monaco, and Luxembourg that will also consider lending. And that's a completely different criteria to what's on the screen, because it's dealt with on a case-by-case basis. Someone who's buying that sort of property has a completely different set of affairs, how their income is declared, what other assets they've got. So it's completely different. But the top half of the screen is really to do with the retail bank type lending. Now, regarding documentation, this is the standard documentation. So it's ID, three years proof of income, documents to evidence loan agreements. If you're self-employed, then they want tax returns, they want accounts. It has got tighter in France compared to where it was 3 or 4 years ago. One of the other reasons why it's got tighter is an outside influence, which is the money laundering laws are in France now, as they are across the whole of Europe. So a lot of other things are being asked for. And I double checked this because we were having a discussion about this the other day. Although it's not compulsory, French lenders do have the option to request a US local postal credit report, as same as they can ask for a UK credit report if they feel there's a problem that they see with the file. And we won't know that until a full file's being put in place and what we can or cannot do. So these are just some top tips. This is a generic top tips across the whole world, but some apply to France, some don't. But the important things, of course, is always give yourself a calling off period when you're looking to buy a property. Check what you're signing, make sure, if you're signing an English version, make sure it's true translation. Arrange your mortgage finance if you can, in principle beforehand, so we can do all the initial checks. Because once you've signed the compte de vente, you normally get a completion date, and mortgages can drag. There is other things like national and public holidays in Europe, and there's lots of those, and they can add to the time delays as well. We did have the problems with COVID, but thankfully that's gone away for the time being. And but when you do have the holiday season, you normally have a skeleton type staff in the offices, and that can delay things. That's on all parts of the transaction, not just the banks, but it's the lawyers and the surveyors and everything else. So try and maintain the mortgage in the currency you can. You're earning it. It's not always possible. A lot of people rent property in France, so they're getting the income from euros, so they can offset it there. Ensure you have an opt-out clause where you're allowed that by law in France, that you can put in there, so it's subject to mortgage finance, so that if there is a problem with the mortgage, if there's a problem with the legalities, or there's a problem with the survey for any particular reason, you can recover your deposit. Take independent legal and tax advice, and if you can, arrange your own survey even if it's a new build, if you want to make sure, do some double checks of what you're actually purchasing. Other points to consider, I've never come across this in France where property's been illegally built. It's more attuned to places like Eastern Europe and other places, thankfully. The good thing about France, which I found with a lot of the other countries, is there's so many protections for the client buying. I've always found it to be one of the safest places for people to buy compared to a lot of other countries. Planning permission, building licenses. Is the price a true discount? You've got to just look at comparables of what you're buying. This normally applies more to new builds. Are you getting full title ownership? Construction's issues. How's it built? Again, that's something the surveyor can take up with you. Lack of amenities. This is something that more applies down in the Spain and Portugal, where we've come across properties which they're bought new build, and then the golf course or restaurants or hotels aren't built alongside. So it doesn't seem to. I've not come across that problem in France. Is it difficult to the original specification? That's if you're getting a new build. What's the experience and reputation of the agent? It's always good to get referrals. It's not just word of mouth. It's trying to get some idea for who they have. Can you see it past things? And the location problems, again, that's something that's applied to other areas, not France. But people have bought in these areas, surprisingly enough, and haven't done the checks. But if you do all those checks, then those sort of things shouldn't happen. So there we are.
Now we're going. Okay, thank you, Simon, so much. And now we can open this up to questions by everyone. And since we have a rather intimate group, I would welcome your questions. Actually, unmute and ask them yourself. So just hold up your hand if you've got a question. Unless Patty, you see anything in the chat though that is of interest in particular? Patty, you're muted.
We don't have any questions in the chat.
Okay.
I did add to the chat a link to your newsletter about property prices in France, so everybody can access that. Okay, now we have a question from Bethany. Bethany, would you like to unmute and ask your question?
Hi there. Yes, my husband read something about seller financing and having better rates than what you would do with a bank or a dealer kind of mortgage rate. is that something that actually happens, or is it more of kind of really far and in between one-offs?
Is that where you're? I'm just trying to think what your definition is, because it may be more American to English, but a seller finance. Are you thinking that the seller who's? Oh, so you mean I know what you're. So this is developer. This is developer finance. So this is where the developer's selling a new build property, and the bank who's helped the developer build the project may be able to give you financing on that basis. Yeah, that is something that does happen on new builds. You can look at that on new builds, but then you've also got to get comparable rates with what you're offering, and also when you do get that, it's always very important you have independent legal advice about that to make sure what financing you're getting. We have had situations in other countries where the bank has got a first charge on the actual project, and when they lend to you, they only do a second charge, which means that if there is a problem in the future, you haven't got the same sort of rights as you would have having the first charge. So it was well worth taking advice from a lawyer if you are going to do development financing, but it does exist on new builds.
Okay, thank you. Okay, so there's Patty, you see a couple of other questions there?
There are a couple other questions. The next one is from Kelly. Kelly, do you want to unmute and ask your question?
I'm not sure Kelly's here anymore.
She is, I see.
Yes, oh yeah, I see her. Well, Simon, maybe you can go ahead and answer it. So any thoughts on PNL, PINEL, an investment option for America?
I don't know what PNL is, and I think that's more of an independent financial side. It's not my side. I don't know what PNL is actually.
It's a French program. It's a French program.
It's mostly to stimulate. Adrian, correct me if I'm wrong. It's to stimulate certain regions, undeveloped regions, and you get a tax reduction. Correct?
Well,
I actually don't.
All I would say is if it's something local and it's applicable for you being in France, then I would say it's probably only applicable to people who have got French residency and done that, because we have similar scenarios where people buy in the UK and they want to buy it. There's a project called Help to Buy or other benefits, but they only apply to UK residents or UK citizens. So I would double check what the rules are to apply for a PNL. And I would think, I'm not an expert, I can double check this for you, but I would think that it would be for somebody who's living and working there and paying taxes there or resident there.
So I'll add a couple. I'll add a couple little things, because a lot of these programs in France are actually for undeveloped areas, and the banks are not the best at lending to underdeveloped areas. I know, Adrian, you correct me if I'm wrong. There's some lenders that will only do, say, Paris or the south of France.
Oh yeah, the lenders are very specific as to where they'll even begin to take the risk.
So in the PNL program, you have to commit to actually renting the property for a period of time, which can be nice, but it also can affect your ability to raise rates if inflation continues to go up.
That's a leaseback program.
Exactly.
Yeah. Just going, there's two other questions about age in there. The second one about the gentleman, Gene, who's 76. Unfortunately, we would have a problem in assisting because of that age factor. But on the question from Liz and Dan, if the person who is younger has the income sufficient to be able to do the mortgage on their own, then yes, they would consider somebody under the age of 70 if their income and liabilities fit the program for the mortgage.
But they have to go on the deed.
Well, they don't have to necessarily go on the deed. You could have it where they just buy it in their one person's name. Again, it may be possible, and something again to have a chat to the lawyer, and we would double check it with the lender, where you can put the property into joint names and just have the mortgage, but that's quite complicated. I'm not sure whether that's applicable to France. I'll have to double check on that. But if the person's income is sufficient and they're not affected by any additional liabilities, then we can do it just in the one person's name.
But the age is not 70, the age is 60. The banks aren't talking to hardly anybody over the age of 60, much less 70.
No, we can go up to age 75. So that's what I said in my earlier slide. So
you can actually give a mortgage to someone who's 75.
No. We could do mortgages for people up to age 75. So it has to finish by age 75.
Well, exactly. So they're not, because it has to finish by the time they're 75. If you're over 60, the likelihood of getting a mortgage is slim.
Well, no, we've done quite a few. The only restriction and the problem you're going to have is the ability to repay the debt over a shorter period because the monthly payments are going to be more. But we don't know what the client's income is and whether that's sufficient. We've had quite a lot of people who carry on working and they're still working and they've got the added benefit of their pension. So you have two incomes coming in, the pension and the earned income, and that's helped them qualify. So,
okay,
but again, it's on a case-by-case basis.
Okay, but Simon, let me ask you this. When you're saying that, are those clients specifically American? Okay, for one thing, because we have that issue with being an American and being because only certain banks are going to lend to them. So are you're thinking in your broader experience rather than specifically with America?
No, as I said on the slide, that slide applied to people from America. This has all been double checked.
Okay.
So people from all the rates of all the criteria on my slides apply to Americans buying into France. So we will look at American nationals who are up. So you would really say if you wanted to take a mortgage, you probably wouldn't go beyond age 65 to apply because then you've only got a 10-year term to pay the mortgage back, and the payments on anything shorter than that will probably be too onerous to fit into the lending criteria, the affordability rules to get the mortgage. But the actual age, somebody age 60 can take a mortgage out if they can afford it, and say for someone age 65 can take it out if they can afford it and have it repaid by age 75.
And if they're still working or salaried, right?
Or pension. The income they take into account is pension or employment. They don't. The other important point of this with most of Europe is that banks do not take rental income into account, either existing rental or any new rental income you're going to get. So it's all based on either earned or pension income. Investment income will be looked at on a case-by-case basis. So if you've got a lot of money invested in bonds or trusts and stuff like that, it all depends on who it's with, where it is, and what sort of yield it's getting. But it's normally based just purely on earned income and pension income, or a combination of the two.
Well, you're giving me a lot more hope, okay, than I've had in the last year, because we've had such a hard time, finding loans.
But this is what, in this market, you have to work harder to try and find the solution. And with my colleague who's based in France, he's English but speaks fluent French. It helps because we can talk to some of the other banks that a lot of others couldn't speak to because they speak the local language, we're local know the people. And he's been doing it 30 years, I've been doing it a long time as well. So it's trying to find a solution. And because we've got we've been doing this for a long time, we know when new banks come into this market. And so we're hopeful. We're hopeful that it will get better. It can only go upwards. And if it gets, as I've said to you, this is not just affecting non-residents buying here. The whole market for even domestically in France is very difficult for people to purchase, even then, because the government is trying to get control over all borrowing so that the economy can recover and grow. So it's not just about foreigners buying there. It's also about the domestic market as well.
Okay, thank you. So Patty?
Okay, question from Leanne. Leanne, do you want to ask your question? Is Leanne here?
Yes, I am.
Here you are, okay.
No, I was just wondering about from start to finish, how long it would take from basically I find a property and I want to buy it, and what's the process and how long does
are you getting financing with the process, or are you just paying cash?
Probably paying cash.
Oh, well then I'll leave that to Adrian to answer that one.
If you're paying cash, okay, basically once you find the property, it takes about a month for the notaire to pull the documents together in order to sign a pre-sale agreement, which will either be a promesse de vente or a compromis de vente. And then it is 2 to 3 months after that before closing. When it's a mortgage, it's at least 90 days. So,
okay.
So in other words, we usually tell people you better allow 4 to 6 months. And we have had some clients that took over a year to close because of issues with the just issues with the title and other situations.
So a long time.
Oh yeah. Allow a long time. You cannot really flip property here very successfully.
Another question which has been raised by Kathleen is about refinancing. At the moment, there's no refinancing for any purpose through the lenders, even for home improvements. That all died when BNP pulled out the market. So at the moment, it is only purely house purchase. There is no refinancing. That may be different for the 2 million plus properties. So I'm talking about retail bank lending here. There is no refinancing. 2 million plus, that's completely different. I think that covers that question.
Simon, that's amazing because I was able, when BPI, was operating, I was able to take 4 equity release loans.
Yeah, well, BPI was previously owned by the Woolwich bought them out.
Woolwich,
but,
right.
Yeah, but they, it's all changed. I mean, if we go back to what we used to do and compared to what we can, it's amazing. But this is where using somebody, a broker to help you to try and know the market rather than just going to one lender can possibly help. I've answered the question about pension and earned income. There was a question here about the advantage of being a resident or non-resident.
Celine Lou, you want to ask your question?
Hi, yes. Yeah, so I'm full-time employed right now in the US and just looking at my options to relocate. And I was planning to spend a couple months and work remote in France early next year and see what my options are.
Yeah, that's where we come into this problem of if you want to, we could still get you the mortgage as a non-resident, and you would only be getting 70 to 80%. It depends on so you'll still be working for the same employer, but working over in there. Yeah, we can help on that basis, and as long as you're, you still have to get yourself. It depends on the tax situation and whether you're resident taxes, and we've had different scenarios. Some lenders are saying you have to be actually resident there and paying tax there and earning in euros. Others say, well, you can carry on earning in dollars, but then they may restrict the amount and loan to value. It's difficult without knowing your own profile, Celine, to actually answer that question in full. Because you may have you have a very good job with good salary, good income, compared to someone who's going over there and it has a completely different setup. But yes, again, those sort of cases we deal with on a case-by-case basis. But the other thing to bear in mind is they don't take rental income into account. So if you move over and you rent your existing property and that's got a debt on it, you still have to have enough income to cover the existing debt and the new debt you're taking on. And quite a lot of people don't realise that. They move over, keep their existing property, think, well, the mortgage is going to pay for the rent's going to pay for the mortgage. But in Europe, and it's not just France, it happens in Spain, Portugal, Italy as well, and Greece and Cyprus, they don't take, there's no buy-to-let type products over there. You can let in instances, but you then have to check the local rules and whether you need a license and if you're allowed to rent in certain areas of Europe. But none of the lenders will take the rental. There isn't if you buy in the UK, that's completely different. UK has a buy-to-let type product as there is in the USA, but in Southern Europe, Spain, France, Portugal, Italy, Greece, and Cyprus, no buy-to-let products.
Okay, so buy-to-let, does that mean that if I qualified for a mortgage and then purchased a property, am I able to rent it out while I'm not there?
Yeah, you can. You can rent it out. As I said, you're allowed to let it out, or subject to local laws and licensings that you need. Mm-hmm. It's just that on the affordability calculation, they won't take that income you're getting in as part of the affordability. It's all based on your own. They used to, yes.
They used to.
They did, and lots of things happened in the past which they don't do now.
Yes, which is all gone. Celine, from my perspective, is one of our best candidates, okay, because she's typical of a lot of our clients. Oh, seriously.
No pressure.
Under the age of 60, wait a minute, she's under the age of 60, she's salaried, right? And so that's already, I mean, what we understand, okay, is that that's already a good start for a profile. And Celine, what you want to do is buy something now that you can invest in and use from time to time, and then eventually move, or possibly eventually move into later.
Well, if you want me to put me in touch with Celine sometime in the future, I'll get a questionnaire over to her, and then we can see how we go from there.
I think that's a really good idea. You got to find it, because in all honesty, you really need to know if you can get the mortgage before you begin to make an offer on a property. Because in today's world, the agent and the seller are not going to want to take the risk of taking on a buyer who cannot get the mortgage, and they would be tying up the property, so they're not going to do it. But if you can get, you know, a decision in principle and a letter from the bank, then you're going to be way ahead. Is that right, Simon? Am I?
Yeah. Well, what will happen is that we will get a quote out to them based on what they've told us, and so that will give you strength to go forward. To put a full application in. So there's 2 stages to the process. What we do is that we get the questionnaire filled in, that comes back with any supplementary questions, and from that point, assuming that we can help, a quotation in principle sent out. If a client wants to go to a full application, then they then have to actually get an offer accepted on a property, but they have the strengthening from that they've got a quote based on what they've told us. But then you have to have a full file put in place, and that means put in all the supporting documentation based on what you've actually declared on the questionnaire and the forms to make sure that all goes through. But you normally have to have an offer accepted for us to get the banks now, because they've had quite a lot of cases where, again, this is something that's changed probably, Adrian, they've had a lot of banks, a lot of problems with people who have committed, or, you know, they've given out preliminary offers, and then they found out when they've got a full file in, there's other things that they haven't declared or found on credit reports or things like that they wouldn't have known about from the questionnaire, because they asked for the supporting documents, and that supporting documentation is the counts. But the important one is bank statements. Bank statements are a very good way of seeing how people run their affairs and what's going in and what's going out. And often that sometimes brings up headaches that we weren't aware of at the time. And sometimes clients forget, if you've got people with complicated financial affairs, they won't know every direct debit and every situation that's going on. But sometimes these things do come to light later on in the process.
But we can't submit a file until a compromis or a promesse de vente has been signed.
Correct.
So it's really until it's real.
Mm-hmm. But that's why you have the clause in the contract to say subject to mortgage finance, to give that situation that if there is a problem later down the road, either because something's within the credit file, or because of the valuation, or because of there's a legal entity that people weren't aware of, then that allows. That's why the compromise that clause is in there. Clause substantive. My French is
basically a loan contingency, and in French they call it a clause suspensive.
That's it. You pronounce it better than I do.
And fewer and fewer sellers are willing to take a clause suspensive exactly because of that. Because if they don't get the financing, the property's been tied up for months.
I know, but it's trying to get that balancing act. It's trying to work with the banks on that as well. But anyway, as I said, it's not one for now. It's a discussion for each individual case that we do.
Okay. Any other questions? No?
No, I have one. Hi, Adrian.
Hi, go for it.
I'm that 76-year-old who can't get their mortgage anymore.
I'm sorry.
And
yeah, but wait a minute. She looks great. She's 76. So who's complaining?
Excuse me. There is, sorry, Jean, there is if you have equity in your property in the States, then you can raise the money on your property in the States. We have done that for people who, if you've got your own existing property in the USA, we have helped people with their existing property to raise a home equity loan on that, and then pay cash for the property in France, because there isn't the whole age. And the same in the UK, because in the UK and the USA there are products available for people over the age of 70 if they've got equity. So if I don't know what your situation is, but if you have got equity in the property that you own that's got no enough funds in there, we could raise it on that basis.
I do have significant equity in the house I'm in now, plus I'm cash rich. I just don't want to give away all my cash in one fell swoop.
So that is the solution. That is the solution. So because I do lending in USA for another lending sources, we've got lenders that we can help you on that basis, and therefore you can still pay. You don't have to use all your cash. You can use the property there. But that wasn't I didn't bring that into the slideshows because of course a lot of people are looking to get the mortgage on there. But it's a fallback.
Because then when you make your offer, it's a cash offer.
Correct, and you're raising the cash there and just transfer all the dollars over in one go, so and you've drawn your investments.
Yeah, Simon. The only downside is the interest rates are higher in the US than they are in France.
Yes, they are, but they are moving up. I mean, the euro rate went up again last week. So it's closing. And what will happen, as you're saying, with the economic things that are coming out, I mean, yesterday the inflation rate in the UK was lower than expected. The economists are not getting it totally right at the moment. Things are starting to turn, and therefore, hopefully, it should come back down. But interest rates, if everybody had a power where the interest rates are going to go or go up or down, who knows?
I do have a follow-on question to that, more for Adrian, I think. Did you ever do in Paris a rent to buy type option, parcels of property? Here in Minnesota, where I am, it's called a contract for deed, where you put a certain amount of money down. The owner is your banker, basically, the owner of the property, and you can extend it out for 10 years and then do a balloon payment. Do they do anything like that in Paris?
I've done that myself in the States. I sold a property that way myself, but no, not really. The closest thing I can think of in France is the viager, where you buy a property of an elderly person who holds the rights of usage till their death, but you know, and basically they end up holding it's a bouquet plus a monthly payment, but it becomes like a mortgage. So no, the only thing is that if you do rent, if you're renting long-term, the seller is obligated to give you first right of refusal should they decide to sell the property.
Thank you. I just interrupted here for a minute.
Oh, it's okay. It's okay. Yeah.
The only other question, but I think Simon, you touched on this, was about to qualify for the mortgage. Does the income have to be earned income?
No, earned and pension income, and they will look at investment income on a case-by-case basis.
But what if you don't have earned income?
Well, then they can look at pension income.
Okay.
Or investment income. You don't have to have earnings. I mean, we do a lot with people over the age of 60 who are just reliant just purely on the pension or investment income.
Okay.
I'm telling you, I'm very encouraged because we have really had a hard time. And it's huge, for our clients, because most of our clients are over the age of 50. And plus, they're retirement age and they're retiring early. This is happening more and more. I'm seeing more and more Americans, particularly, retiring at very early ages. Now that they can work remotely and whatever, they're just sort of saying, okay, I've made enough money. I'm leaving. I'm getting out of here.
The only thing we found with those people, sometimes with people when they do retire early, is when they're allowed to draw down their pension. And also the pension pot that they draw, if they draw it early, can be less than if they draw it at a later age, just depending on the annuity rates as well. That's another thing that you have to take into account. But anyway.
Okay. Any other questions?
Yes.
Good, go for it.
When you had mentioned long-term renter has like first right of refusal for when the property goes up for sale, what would be considered long-term for a scenario like that?
A 3-year unfurnished lease.
3-year unfurnished. Okay.
Yeah. A furnished 1-year rental lease they are not obligated by law, but they're morally obligated, but not by law.
Okay. Thank you.
But it makes sense, doesn't it? If you owned a property and you wanted to sell it, wouldn't you ask your tenant first? That's how I acquired my own apartment in Paris.
Mm-hmm.
I was the renter, and they decided they wanted to sell it, and yeah.
You did that in New York too.
I did it in New York. I sold an apartment in New York to my tenant as well, because the person's in it, they're happy, they don't want to leave, right? It makes sense.
Mm-hmm.
Yeah, exactly. Any other questions? Wow, this group's easy. Logan, I see you're on. Don't you have a question? No. Simon, before we were talking, when we were talking earlier about the number of Americans moving over here, right?
Yeah.
Do you know that France issued 50% more visas to Americans last year than the year before?
I know, it's amazing. I was saying, we were having an early conversation a few years ago. The American market, Americans moving into Europe, was very, very few. And in the last 2 or 3 years, they're buying in France and other countries. It's got very, very popular, and which is good for everybody. Which it means, again, going back, the prices will start to increase because you've got a new buyer market buying into Europe. So it's a good add with the dollar, as Brian said earlier, with the dollar as strong to the euro. It's a good time to buy.
Well, that's okay. So if that's the case in Nice, for example, right? Because what their experts are saying out there is that the Nice market is increasing because it's not as dependent on people who need mortgages, right? It's foreign income coming in. So if that's true, if more and more foreigners buy in all over France, then it should help increase the prices.
Yes, exactly. And as I said earlier, I've always used France as my thermometer for the whole industry, because you've got different type of people buying in northern France as you have buying in Dordogne, or buying in the Alps, or buying in the south of France. And if one area is busier, then you know that other areas around the world which have similar prices and type of product will be busy as well. And that's always been the case.
Okay, so what you're saying is if they're buying in Nice, they're going to buy in the Algarve.
Correct, and buy in the south of Spain, and that's what we're seeing. Exactly that, and and it's a very good. France has always been the thermometer, and people who buy in Normandy and Brittany, which is the lower end of the market traditionally, tend to then, if that gets really busy, then we see Costa Blanca, Costa Brava in Spain, and the Alentejo in Portugal, for example, suddenly starting to take off. And we now got new markets come back in Greece and Cyprus back in the market, and they've have been out of the market for about since the last crash in 2007-8, because remember Germany bailed out Greece, so all the properties went into negative equity, but they're now back in, and lenders now feel comfortable to lend there. So you've got those markets there. Italy's there. That's also been busy. So, but France is it's a great market, and I've been doing, as I said, involved with 35, 40 years. But as a thermometer for the whole industry, it's really good to let you know where markets are busy and where's not. And it's the south of France is busy, and therefore, naturally, by default, is the Algarve and other cities.
But why is it the thermometer? Is it because it's so centrally located in Europe?
No, because different type of people buy in different areas. The type of person who buys in the south of France is different to the type of person who buys in Normandy and Brittany, or buys in Dordogne, or buys in the south, in the Alps. Completely different. But by looking at the whole market and who's buying, and if we go back to pre-2007, when the market was really, really buoyant, Normandy and Brittany and those areas, they were selling out, because everybody was buying everywhere. And so it was such a busy market. That's died down a bit now. And therefore, and you look at the mid-range products, it died down for a bit, but that's all coming back now. So we're seeing that the average purchase price and mortgage in the popular areas, which was on my first slide, is increasing. And therefore, you've got more people coming into the market. And you've probably found the same. You mentioned the south of France, but there's probably other areas which are that you could probably highlight that we're getting a lot more interest. I mean, we're getting a lot. You mentioned Bordeaux in your slide there. We're getting a lot around that area, a lot in Dordogne, quite a lot in Paris, and the Alps, especially the popular ski areas. Very, very popular.
By Americans?
By all nationalities.
Really? Okay. I mean, because we have seen more Americans interested in other parts of France beyond what they used to. It used to be Paris.
Oh yeah, I agree with you. Yeah, I agree because
Totally
but the Americans are discovering the whole of Europe. They're looking at all different areas. So you're right. When we looked at the American market going back 5-10 years ago, it was only in certain pockets, and you could know where they would go. Now it's opened up. Hence why other countries have opened up to it as well. And we're getting a lot more people from the eastern seaboard buying because it's the closest area to Europe, but it is opening up with other people. So it's very, very interesting. And if you think of the amount of people in America that could be interested in buying property abroad, it's huge. So, and we've got a lot more agents. I'm doing a lot more of these seminars now. I did one for France again. I'm doing another one for Italy. Got another one coming out for Spain. So that's only in the last 2 or 3 years. And I said I've been doing this for 40 years. So it's great to see another market come into another market as such. So it is interesting. And that's also driven by what Brian was saying, the dollar to the euro. And of course, that's why the UK was very busy as well, because the dollar and the euro to the pound. And we have a lot from the Middle East as well. I don't know how many Chinese you're getting or Hong Kong, but we're very busy in the UK with that market buying here. And you're finding that in the western coast of America and Canada, a lot of Far East purchases there.
I'm sure that's true, but they're not our market, so I don't actually know. And I don't have any relationship with that, so I wouldn't know. You know, we're Americans for Americans by Americans, and so we're in our world, so to speak.
But Adrian, are you getting clients that are expanding outside of the French Riviera in Paris, or
yes, oh, yeah, absolutely,
to those two regions?
Absolutely, but those clients are more renting. There are more people renting than buying at the moment, and they're testing out other areas of the country. I still with my own personal consultations, I want to make sure that they understand what they're, because what's in their heads and what's reality may be two different things. And so like for instance, we've had a lot of people interested in Bordeaux. Well, Bordeaux is a really interesting city, for a weekend. But do you want to actually live there and make a home there all the time is a big question in my mind, because in order to travel from Bordeaux, if you're 65, 70 years old, and this is your opportunity to travel all over Europe, right? For the first time in your life, you can get on a plane and go to Venice for a weekend for 70 euros round trip. If you're in Bordeaux, you're not doing that as easily as if, then if you're on the Riviera and you can be at an international airport by taking the tram for 15 minutes. So, it's how much access do you want to travel, and where are you really going to find a community? And we have a lot of reasons why there are certain parts of the country that are better for our community than others.
Well, I always find it fascinating how many people will move over to another country, live there, and not done any research beforehand. They've not done any homework. They've just been there. Maybe they've been there a couple of times on holiday and they think it's there, but you can guarantee within 6 months to a year, and then we could go down another line of how many people go and buy a business in an area they've never known or done. That's a completely different story of what they do.
I had clients just before this who have decided to move to Nice, but they have never been here. Okay, I am convinced that they will be quite happy because they've really done a lot of research, and now with the internet, you can Google every street, right? You can pretend that you're there all the time. And of course, we talk about it quite a bit. So they've decided that, but they're going to rent. They're not going to buy first. They're going to rent.
But that's sensible. We used to have people before, 427, 2007, when everybody was buying everywhere. People were buying in Dubai on the basis that the reason they were buying because everybody else was buying there. But if you take the other scenario as an example, I had somebody who was buying a bar in Spain. They had no experience of running a bar, except that her boyfriend in his gap year had run a pizzeria in Greece. And on that basis, they were selling up, moving over to run this bar in Spain. And they had no idea.
That's called a big fat risk.
But not to them. That was their dream.
Exactly. And they might do great. Who knows, right? We are down to our last minute. This is your chance for a last question before we sign off. On that note, I want to thank everybody. I want to thank Brian Dunhill from Dunhill Financial. I want to thank Simon Kahn from Simon Kahn. And what's your formal name, Simon, besides Simon Kahn?
That's it. That's me. Well, everybody knows. I've been in it a long time. That everybody knows is my name. And my website is simoncon.com. And you'll find buyer's guides and everything else all on there as well.
Okay, great. And thanks to all of you. And Adrian Leeds Group is here to help you. And we will see you next time. Our next webinar, our next financial forum is on November 15th. So mark it on your calendar. And we're going to be talking about immigration. So thank you all very much. We're signing off and we will see you next time.